Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Friday, August 31st, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Please take the time to look at this entire page and read it in its entirety. With that thought, let's take a look at the SPX for the first 4 days of the last week in August, and we see that we are continuing up in an uptrend. As we continue up in that uptrend, we have entered a down cycle in that uptrend. And so if we look at the last 4 days, you'll see that we are getting lower highs and lower lows as we continue in a down cycle in an upward trend. Notice that we have the 30-day moving average sitting right below us at about 1392, and notice that we have been traveling up since early May, and we've been traveling up in this very defined pattern, getting higher highs and higher lows. The month of August certainly gave us a nice rise in the market, albeit on very low volume. Now let's take a look at our chart that gives us a 1 month view, and we'll look at these last 4 days. We get a little bit of close up, and we see that we had a big up day on Friday. We popped up to that area of resistance at 1417 on Monday, and from that point on we had very difficult time going higher, and then finally it kind of threw in the book today on Thursday, and we see that we broke through that previous low on Friday, and what we're looking at is probably further movement down to this 30-day moving average, as that market seems to be pulling back to some level of support, potentially around 1388. We do have news coming out tomorrow. The economic news for the week was not very outstanding or very strong. Had issues coming out of Europe and Asia. You know, it sounds like the whole summer when I talk about these things. And on Friday we have the G7 taking place in Jackson Hole. Expect Bernanke to speak, and there's been quite a buzz about that information that he's going to come out with in Jackson Hole. So we'll see what happens tomorrow. Watch that first hour to help you determine on direction of the market as we close the week and the month of August, and take a look at September, which traditionally is one of our weakest months of the year. And we also have coming up a 4-day trading week next week as we go into the holiday on Monday, when the market will not be open. With that, let's take a look at the Dow and see what the Dow did during the same period. Looking at the last 4 days, we see we are in a down cycle, continuing with the Dow, where it was a little bit weaker than what we saw in the S&P. Actually dropped below the 30-day moving average on Thursday, and we very well could be headed below that magic 13,000 level. We'll see if that acts as support. Again, watch the beginning of the market tomorrow and give an idea of where the opening high, opening low is for your time span of interest to help you determine the direction for that Friday market going into that 3-day weekend. NASDAQ showed a little better strength and was hanging up there pretty good until finally throwing in the towel. But notice it did not get as low as that low on Friday. So NASDAQ showing a little bit more relative strength than the other two indices. Looking at the Russell 2000, it showed a lot of strength, kept hanging in there, went up and trade to the top of that trading range that the Russell's been in for a while, and then on Thursday gave it up and had a big down day as the Russell decided it was time for it to pull back. We'll see how far it pulls back it's nowhere near that low that we had on Friday. So a little bit of strength, a little bit of weakness, differences in our indexes as we look at the different levels. Russell in the month of September has been known to have positive numbers, whereas it's about the only one that over the last 15 years really shows us any kind of gains in the month of September. Next, let's take a look at the VIX, and we see, fear coming into the market, and we see that we have shot up about from 13. We're up about 4.5 points in the VIX as we see the fear coming in further and further as we head into the month of September, giving us a bit more volatility and therefore a bit more premiums for us to work at. For those of you that are option sellers and living off of theta, that certainly provides some added opportunities for you. Let's take a look at some of the sectors that we had during the last week and see how they performed in our down cycling market. All right, we see the bonds. Bonds did pop up a little bit as the market was pulling back. No big surprise. Looking at TLT, which is our ETF for the bonds, giving us some kind of concept that that's kind of finding and following normal levels. Notice the very, very low volume in the bonds as we don't see any big action taking place there during the last 4 days. Next, let's take a look at our next ETF, and that is the XLF in the financials, which generally will follow the overall market, and we do see this continuation of the down cycle on the financials, and we'll see where they head as we may be at some kind of level when we get to the 30-day moving average on the S&P. Already reached there on the Dow, so we'll see if financials decide to pop, showing a little bit of relative strength to the other two indices. Next, we're going to look at USO, our exchange-traded fund for oil, and we see that it is pulling back with the overall market and pulled back much lower now than where it opened on Monday. Also lower than where it was as we closed the week on last Friday. So oil showing a little bit of weakness headed for that 30-day moving average. And finally, there's been gold in the air as far as news, talking about using it as a legal currency in the United States. We're going to take a look at GLD, our ETF for gold, and we see that while the market is showing a little bit of fear, gold is pulling back a little bit. Where is that safe haven? But we did have quite a move in gold during the month of August, so we're pulling back to that 200-day moving average. It'll be interesting to see how that will all fit as we look at gold, trying to determine whether it wants to run or not as a safe haven. And finally, we're going to take a look at the ETF, the Spider, and we're going to look at the Spider to see what kind of volume we're having in this uptrend with a bit of a sideways move here, with the last 4 days being a downward cycle in this uptrend. And we see volume for the entire month has been extremely low as we've been climbing higher. And in a election year that it is not unusual for us to see August be strong. I was a little surprised, did not fully expect that, but nonetheless, August did take off, and we did break out of that previous trading range. We'll see if we head back to that trading range. Some talk in September that we could have quite a pullback, and so be aware of the bullish side of the market as we pull into September, which generally sets up the fourth quarter, which is usually the strongest quarter of the year. So for those of you that are gold members, stick around. We'll talk about our stocks to watch. And for the rest of you, thank you for being here. This is Butch Shorak, Options University. It's Friday, August 31st, 2012. This is Market Recap. 1 day to go in the week, and then a 3-day weekend. Please enjoy. Thank you.